Happy Thursday, everyone. This is Pedro De Leon.
And I'm Chihiro Kurokawa, and we are Beyond Stocks.
So, Shihiro, tell me a little bit more about this community. Who is this for?
Yeah, I'm glad you asked that question, man. So we're building a community of high-earning professionals and business owners who want to learn how to build wealth outside of traditional investments like stocks, bonds, and mutual funds.
Definitely. So, one of the outside of alts, right, topics that we're going to be talking about today is ETA. So, for those that don't know what it is entrepreneurship through acquisition. So, I don't know if you guys have been seeing on social media, seeing a lot of programs and workshops talking about like, hey, we can teach you how to buy a business, similar to back in the days. I'm sure you remember this when people wanted to flip houses or even learn about wholesaling. So it's a similar process in a sense of like, how to work with a seller. So entrepreneurship through acquisitions and search funds. Even there's two types of search funds, right? You got the traditional, and then you also have the self-funded. Self-funds individuals like myself, we go out there trying to find a business that it fits our criteria. A traditional search fund, it's someone that, let's say, graduated from like a school MBA program as part of an alumni. They get funded so they can go out there and find a business. And typically, they get funded for a year or two. I'm sure, I don't know, am I correct, Shira, on that?
Yeah, that's my understanding of it. Yeah.
Yeah. Definitely. So, so lately, this past Monday, I made a comment on Facebook and I said that the ETA or the search fund trend has been slowing down, and I've been getting a lot of comments on that. Right. So it's been happening. Here's why. And Shahiro's going to touch a little bit more on the SBA side, because in order to acquire a business, the SBA loan is where most people go look for to get at least finance the 80 or 90% of the business. So, but what's
Right.
going on right now? Like what are some of the things you're seeing right now with the SBA loan?
Yeah. So the Trump administration recently issued some guidance regarding the SBA, indicating that in 2024 that they lost $397 million, and um, so that's a pretty strong motivation to change their underwriting guidelines.
Yeah.
Meaning, in other words, getting a loan is getting harder, right? They're tightening up their standards. So credit scores or how you structure the deal to
Mm-hmm.
get the financing for it, not just the debt financing from the SBA, but the equity portion of it and how that's structured. They're tightening down on a number of different factors, all with the intent of basically reducing credit losses, delinquencies, and bankruptcies and foreclosures and such.
Yeah. So before you jump and say, hey, well, SBA, the government is making it harder for people to acquire a business or do business, getting the loan itself, that is one of the biggest reasons why it's happening, right? A lot of the loans are getting default. I have met several people that have actually had to shut down their business after they acquired a business. And we're going to touch a little bit more on like why sometimes post acquisition for a lot of these searchers failed, and then so not everyone, it's not because you're not smart enough, whatever. It's just that the experience. So one of the things that I've learned is that when you are a business owner, you're essentially like need to understand all the components that comes into the business, from marketing to operations, right, to even finance, and financial budgeting and everything. It's like one of the biggest thing that you need to keep up with throughout the entire year, but it's the least thing that people it always push to the side and expect their CPA to just kind of figure it out for them, right? So no, so it doesn't work that way. But one thing that I do want to touch is that a lot of these searchers underestimate the amount of work that's required, right? So especially the type of business you're getting into, if you don't have the knowledge in it. So let's say you've never been a mechanic, you have to understand all the components of running a mechanic shop, right? And and let's say if you have a flow of leads coming in, clients coming in, what happens? What are you going to do if one of your mechanics calls out sick, or one of your master mechanics calls out sick, right? So then that's a whole different conversation, and we can talk about that forever. But that's kind of what we've been seeing, and which is why I tell people, like, if you're going to acquire a business or you're asking investors to invest with you as a operator, that you need to have all the ducks in a row, right? And that's kind of the example what I just gave, right? So the other thing too is a lot of people say, hey, I'm gonna just kind of figure it out after I acquire the business, and that doesn't work well, right? You
It's
have
naive.
yeah, I've seen this a lot, right? And this is kind of the push I've been seeing, which is your goal is to go ahead and acquire the company and then just figure it out later on. No, you have to have the plan now. Figure it out how the company is operating, figured out the clientels. I mean, figured out, like, even if there's any lawsuits in the company, don't figure it out later. Because once you acquire it, that's not the end goal. The end goal is eventually is to sell the company, right? So yeah.
What I think about listening to you talk about this, Pedro, is if you've never owned a business before, then you need to understand that being an entrepreneur is difficult in a way that you've never experienced before. You
Mhm.
simply just don't know what you don't know. I don't think people are fools, nor are they naive getting into this. They have some sense that yes, it's going to be difficult, but like, you don't really understand in what ways they're difficult because it's so unique, the experience of being an entrepreneur. And so taking things for granted, or overestimating yourself, being overconfident,
Yeah.
these are things that can be fatal mistakes.
Right. Absolutely. So you have to have some sort of you you know a balance in a sense, right? It's okay, you can say I can do this, right? But you want to know all the what ifs if doesn't pan out, like how to actually make an exit if the business goes south, right? So, but the other point that I want to make is, and I've seen this a lot, even if someone who's not acquiring a business within their company, is that they don't hire or have the right people in place in the company, right? So you cannot, and I'm gonna say this, you cannot scale your company just yourself. Now we can have this conversation about how AI is going to come in and you can be a solopreneur and scale the company. That's a different topic, but I can tell you right now that the biggest problem that I see is that once an operator acquires a company, they don't hire the proper people like a VA to do some of the low skill work, or even hire a fractional executive for high skill work, right? So as an example would be a fractional CFO or a fractional CMO for marketing, right? Having implementing these strategies, so even though it's going to cost you more upfront, but in the long run is going to help you out, right? And having these conversations before you acquire, build a team, go out and network, talk to a lot of people. Tell me a little bit more about this industry. Do you know about it, right? Because they're going to give you some insights. And that's really, really, really important before, making that decision of saying, I'm going to acquire this. Now, with all that being said, why are we talking about this? Because there's been a big push for investors to invest with operators. And as an investor, you want to make sure that you're covering your bases, understanding the operator, understanding what is their background, how strong is their project management skills are, and what industry are you getting yourself into, right? Because if it doesn't pan out, then there goes your money. And typically, how investors invest with an operator like this is on the down payment, that 10-20% of the business, right? So anything you want to chime in on that, Shiro?
Yeah, nobody goes into an investment and nobody starts up a business or acquires a business thinking they're going to fail.
Hmm.
And yet we all know that an extraordinary percentage of new businesses fail, right? But
Yeah.
somehow it's not going to be me. So
Yeah.
it's just important to really have humility and know that
Hmm.
that there's way more that you don't know about running a business or franchise or car wash or an apartment building or whatever, any
Yeah.
business. There's a lot more you don't know than you do know about it. And so if you have not carefully thought through who's going to be my backstop for marketing, who's going to be my backstop for operating, who's going to be my financial advisor in this venture, all of that stuff, just like you said, Pedro, you cannot do it yourself.
Hmm.
And if you aren't going into this with a team, uh, it's going to be really tough for you.
Right. Exactly. I want to touch something because you say franchise, right? So I met an individual here in DFW that he did a roll up on was it Pizza Hut? Pizza Huts. Now, majority of the Pizza Huts that he did roll ups were on the East Coast. And so I've been hearing as well, like people want to do roll ups on different franchises, right? But again, you got to have that knowledge. And the only reason why he was able to do that and successfully do it, and he was backed up by a private equity firm, was because of the years of experience that he has on rolling up on franchises. And he finally did it for himself, right? But he worked with another firm before, and this kind of he acquired that experience. So
I
yeah, go
got a
ahead.
story about a friend who's in a franchise. It's food and beverage oriented.
Hmm.
Um, Fairly well-known brand, but here's the problem with that particular company is they squeeze the crap out of their franchisees.
Oof.
Um,
Yeah.
and so when I learned how much he was actually taking home
Hmm.
after running the business on a yearly basis, I'm like, dude, that's like a starting analyst salary at some company. That's the kind of money that 25-year-olds are making. But
Jeez.
you are a business owner, and
Hmm.
who knows how many hours a week that guy's working, right? And to be just squeezed so badly by the corporate parent,
Hmm.
um, it was just like kind of heartbreaking, honestly, to hear that story.
Yeah. Uh, just acquiring or buying a franchise is a whole different conversation because it's like a lot of things that over promise under deliver type thing that I've seen, so but yeah, but good point there, man. Definitely. So now, with that, there is something that you want to keep in mind, and is that when it comes to ETA, um, there's a size of like revenue of what the company makes that can make sense versus going after the ones that are making like a half a million because the SDE is very low, right? But
What's
if you go
SDE?
uh, sellers discretionary earnings, right? And so as you get higher, you're making over $5-10 million, right? There's more meat in the bone, essentially. So if you're working with a search fund, a searcher, ask him what is the size, what is the buy box that they have that they're working with, right? Because sometimes they can go a little bit over 5 million because of they won't get approved by the SBA. So some of you guys might not know the 5 million is a cap to do an acquisition for with an SBA loan. So
Which
yeah.
means, very roughly speaking, you might be buying a company that's like one and a half, like $2 million in annual earnings max. Um,
Mhm.
because if it's 2 million, then at a 2.5x multiple, right? That's a $5 million business.
Yeah. Now, if you have any questions or you have any comments, let us know. Go ahead and comment them right now, and we'd love to have the discussion. But other than that, it's something to keep in mind. So it is the trend is going down a little bit. Is actually just keeping those that are experienced and do the things properly. They're the ones who actually still going out there and finding these deals. So but yeah, but that's just for you guys that are looking to invest with a search funder or slash operator, is to keep in mind, and there's a long list of what to ask for those that are actually looking to raise capital from you. So now, with all that being said, the one thing that I've been asked before was like, how do you get into alt investing? And there's so many ways, but like I'm gonna let you hear kind of take on this one.
Yeah, my journey into alternatives started with multifamily syndications. So,
Mhm.
here in Dallas Fort Worth, there's multiple like fairly well known, multifamily like mentorship groups. The
Yeah.
pejorative way to refer to them is as gurus, whatever you want to call them. They're people that uh, they don't all exist anymore. So that tells you
Mhm.
something about multifamily, but they helped people learn how to get into the game, right? So I
Right.
went to like meetups and conferences and stuff, and then did end up joining one of those myself to learn um, how to get into multifamily. Although I want to clarify that I didn't learn a whole lot, honestly, because I was a very aggressive consumer of knowledge when it came to learning the mechanics of it. So I didn't learn so much, but where that mentorship was extremely helpful was I was now plugged into a community of a bunch of people who wanted to do exactly what I wanted to do, which was
Mhm.
be a multifamily owner operator. And
Right.
it also connected me with service providers that I needed, attorneys, CPAs, and such. And then, lastly, and probably most importantly, it allowed me to partner with people that enabled me to take down these deals. So
Mhm.
that was my path.
Did we lose you?
Uh, the operator
Oh, okay.
of a private equity business, a real commercial real estate private equity business.
Okay.
What we primarily focus on here at Beyond Stocks is we want you to learn how to invest in to private offerings and do that passively. And so there's a difference between being an active investor, meaning you're running the deal, versus being a passive investor, where your involvement is non existent from a managerial standpoint. You're just contributing capital. And then you have an expectation that
Mhm.
through the efforts of the general partner, you will earn a return on the capital that you contributed to the project. So
Right.
that's the definition of a LP or limited partner. But in terms of getting involved with private offerings as a limited partner, it's not too different from what I did, which is to say, you still got to meet people. You got to go out to meetups and
Mhm.
conventions and conferences and stuff in order to meet operators, in order to meet the people who are looking to raise capital for their projects. And so that is how it is done.
Right. One thing that I want to add is that, again, in order to be have access to these great deals, right? Um, it behooves you, military term, to be an accredited investor. And many people don't even know, right? And you can work your way up to become an accredited investor, right? So, um, because that's going to open up more doors for you. But there are programs or there are platforms that you can invest in that you don't have to be an accredited investor. And we can probably have some people that can talk about that in the near future, come in, in the show, have them come in the show to talk more about their
So
platforms.
tell me real quick, Pedro, what is an accredited investor?
Yeah, so an accredited investor is someone that it makes about $200,000 a year, the past 2 consecutive years, to show proof of that, or have $1 million of asset, not including their primary
Actually, it's not assets, it's net worth.
net worth. Sorry, yeah, excuse me, yeah, net worth. I forgot to mention too is that if you're married, it's 300,000, right? And so the past 2 years consecutively, and with the projection that you're going to be making the same in the future. And the reason is because once you make the money, the idea is that if you lose money, you understand the risk to that versus someone who's not an accredited investor. You know, there are other ways to become an accredited investor. Like, let's say if you have your Series 7 and you're 65 as well, right? So, because you know the risk. So, because you're in the business, right? So, yeah.
Yep. So now, in terms of alt investing, we talked about how you get deal flow, how you learn about deals
Mhm.
from people, which is through relationship building. One thing that I think about when I'm evaluating a potential deal to invest in as an LP is, well, right now, what am I looking for? Do I want income or do I want growth? So the so-called risk-free investment is going to be treasury bonds, right? United States treasury bonds. And then from there, on one end you have that, and then all the way on the other side of the risk reward spectrum is something that has a really high yield, but has a high risk, like maybe something like real estate, commercial real estate development, or venture capital. Those are higher risk, higher reward types of investments. But everything else is going to fit somewhere in between in that risk reward spectrum. So if you're an income oriented investor, or right now you're looking to allocate to something that's safer, then you're going to be looking more for example, debt instruments that make a flat interest payment on some sort of recurring basis. Or you might be looking at a preferred equity investment, which, at least in theory, is going to be something that is more income oriented and should be safer than a common equity investment, which has a lot of upside and hence should have a lot more earnings potential or profit potential, but you're taking on more risk. So that is something that you need to start with is, where's my risk tolerance for this particular allocation of X $1,000? And then from there, you're going to rule out a lot of different investments. And then the next question would be, well, let me ask you, Pedro. So what asset might achieve your goals? So let's just suppose, Pedro, you're looking for a growth investment. So how would you go about evaluating asset classes or investment types in order to find that growth investment?
Sorry, you broke up a little bit. Can you repeat that question?
So let's suppose, Pedro, you are a growth investor, or at least looking for a growth investment for this $75,000 you want to invest within the next 6 months. So how would you go about considering asset classes and investment types for that?
The most basic stuff, basic asset class people have probably heard is multifamily, right? Would probably consider that. There's other ones that I'm looking at too as well, which is would consider also growth on the side. It would be single family houses, but in the residential assisted living model. Does it make sense? Now, so the residential assisted living model is more like you buy a house and you rent out per bed to seniors, but you have a company that will deal with the care, right? So you're just there as a actual real estate investor, passive investor, right? Now the growth side, right? The money that you put on down payment, if you're doing a down payment, the house itself, you're getting cash flow, but the house itself is appreciating. So, depending where you're getting it to as well. So that's an example. Others will be going that I was thinking about was the tequila barrel. It's a 3-year hold. It can kind of convert into something to a 5-year, depending on the how long is going to be fermented as well. We had an individual last year that came in. We put an event together. He wanted to talk more about tequila, so that's one asset class.
That's unique, man.
That's very unique, yeah. And there is others whiskey companies out there that are actually raising capital for the barrels as well. So that just keep that in mind. Now these are like could be short term and long term holds. With a tequila, they were talking on projections between 15 to 18% return, but it's a 3-year hold. Remember, is a liquid, so keep that in mind. The other thing too is there is within it's something that popped in a conversation I had. A friend of mine was the storage units as well. That's another asset class and within real estate, right? Now, without saying that, right? There is so many out there, but start with one, and as you get familiarize yourself with that, then you can start diversifying. They're trying to do a bunch of different types within a year because there's a learning curve to that too as well, right? So that's kind of what I recommend. But there's some, I like to stick with real estate or, one that I've done. And then now this is a startup, right? And the only reason why I did it was because it's a friend of mine, and I trust him as an operator, but I sort of invested a little bit on a whiskey distillery out in California, right? But that's a startup. So that's a whole different asset class. Working with startups is like hit or miss in a sense, right?
It's a
But
higher risk
it's a
investment,
higher
right?
risk investment, so, but
Yep.
it definitely makes it, hey, more bang for my money.
Yep.
So, yeah.
Yep. Another important thing for people considering investing into private offerings, something that they should learn about, is something called a self-directed IRA. So
Mhm.
suppose you have I call it a stranded 401k. You used to work for ABC Corp. You haven't worked there in 3 years, but you had a 401k with them. And let's say you have 100 grand in that 401k and it's just
Mhm.
kind of sitting there. It's still invested in stuff. You've kind of forgotten about it. Well, that can be converted into something called a self-directed IRA, which is distinct from a regular IRA.
Mhm.
And when it's self-directed, with a few fairly limited exceptions, you have checkbook control over those funds to invest into almost anything that you want, again with limited exceptions. So the self-directed IRA is a really powerful tool for people who invest in private offerings, because you cannot do that with the vast majority of regular IRAs or 401ks.
Right.
So it's a retirement tool that's qualified to allow you to invest into private offerings. So a
Mhm.
lot of real estate investors use self-directed IRAs. So it's a great way to invest into things with a limited or eliminated tax liability generated by those investments.
Mhm.
It is going to depend on what type of deal you invest into, but in some cases, there's no uh, tax generated on the returns that you get.
Right.
Usually, I think there is a little bit, but it's still much, much more tax efficient than investing cash.
Yeah. I do recommend there are some things you can't invest. So it's important to get with your custodian and ask them like, hey, what are some of the things that we restricted in investing
Yes.
in? So yeah,
Yeah.
absolutely. But other than that, you have a lot of flexibility versus a regular IRA, Roth IRA as an example, so yeah, definitely. But with the whole thing with beyond stocks and also looking for deals and everything, networking is really important. A lot of people don't like to network, which I understand. Sometimes they just do it online, but it's really important to just get together with people in person, because you never know who you're going to meet, or you never know what kind of deals is going to be presented there that can spark a conversation, right? With an operator and say, hey, you know what, I want to look more into it, and then you can start doing your due diligence, right? And I have seen deals been done in person versus just talking to someone online. The higher success rate, or at least the rate, has been higher in person. Now we have our events in person here in the DFW, because we want to connect with other investors and connect with other potential operators to kind of see what they have going, and then and we like to diversify in different industries, right? So
Yeah.
yeah.
And we're actually holding that event tonight.
Absolutely. Tonight. Yes.
Yeah.
Here in McKinney. So we're excited about that. And some of you guys have been following us for so long. Thank you for being a supporter, and thank you for joining our events. But it's growing, and community, great feedback from you guys. So we appreciate that a lot. So absolutely.
Yes. Thank you.
Yeah. Thank you so much. So anyways, guys, if you have any questions for us, or if you want to pull us aside, you want to DM us, let us know. We're here to help. If you come across a deal, then say, hey, you need some second set of eyes, let us know. And
And
we
if
kind
you're an LP and you've got some interesting stories or investments, uh, DM us, email us. We would love to have you on.
absolutely. All right, guys, take care. And for those that are going to be joining us tonight, actually, looking forward to seeing you again. All right. And take care.